So first piece of news, venture funding is now stabilized. People have been wondering on the up and on the down, when is this going to end? When is it going to get on the up? When is it going to end on the down? Clearly 2021, end of 2021 was when it ended on the up. And now on the down, this year effectively is the continuation of a slight growth, which means we are out of the biggest part of the downfall and on into a more stable market. That's the backdrop. In Europe, deep tech is now a third of total VC, and that is actually a bit of a novelty because I'll get to it in a second. This was not the case up until basically now. And 33% in deep tech of European unicorns are in deep tech this year. That means that more and more companies are being created that hit unicorn status in deep tech proportionally to everything else. We believe this trend is going to grow because we've been following this trend for a little while now, 4 years to be exact, into more and more actual precision. And this is just a continuation of something we've seen and the underlying data and conviction we have. European venture has pivoted into physical tech. There is live data and that you'll be able to get if you check out dealroom.co and where this is coming from. And of course, the shift is interesting because when before it was all about SaaS and manufacturing, now it's marketplace. B2B SaaS and marketplaces, now the manufacturing is going bigger. So physical tech is not a niche anymore. And in 2023, there's been more backing for frontier tech and physical tech that's ever been before, which is a nice contrast to the fact that if you look at venture capital, 2021 was a boom and bust to 22. But deep tech actually has been in gradual raise, and now finally is all of a sudden, the famous overnight success that takes 20 years in the making, a simple fact force to be reckoned with. I can see a Q&A. Yeah, of course, we'll actually be sharing the recording. Back. Now, one thing to be kept in mind is that despite the optimism, deep tech is a different beast than general tech, and especially the way general tech has been invested in the sense that for typical P2P software or marketplace, there are basically rule of thumbs, the rule of 40, and how much companies need to grow users engagement. You can plot in a spreadsheet, and basically as soon as pre-seed is gone, you can already start to play with this sort of pattern recognition. Whereas in deep tech, development times are a bit different. The intensity of CapEx and the technology risks are a lot bigger, of course, hence the name, I guess. But on the flip side, competition and market risks are reduced in the sense that, especially on the competition side, precisely because a company is difficult to build, there is less people just trying to attempt. I remember a friend of mine, actually, the other day, I was talking to him, one of the founders of Boba, now acquired Carta, that was saying how an ideal company has no competition, it's easy to build, and has a huge market growth potential. And the reality is that no ideal company exists, so you've got to pick ideally two and find a way to fight the rest. The fact that your weakness in deep tech is very clear what you do. You just take something that's really, really hard and you try and make it happen. Of course, for that to be a company and not a science project, the market opportunity and the fact that the company actually has like commercial capacity has to be quite clear. And the title, you cannot quite see it, but effectively it's about the fact that if you look at venture in general, venture-backed companies in general, the time to exit is approaching 20 years anyway. The last 25 years has been the boom of software companies, and yet companies are staying longer and longer private. So the old saying that deep tech takes too long to exit, well, deep tech does take long to exit, but it's not something that's out of sync with the general tech market. And as far as we see it, this trend has been ongoing for quite a while, and there's no reason to stop. I see the two almost approaching each other. And now we can look at Europe, because of course we're based in Europe, and we can see that we have almost an edge in the sense of having amazing scientific clusters here that for once rival the rest of the world. And we have two amazing clusters starting to form also in terms of where innovation can cross borders. Of course, within the UK, the Golden Triangle is something everybody knows, but also in Europe, you start to see Grenoble, Zurich, Milan, Munich starting to have, because they're so close to each other, start to have some crossover in terms of who the investors are backing the companies in these hubs. And of course, what are the events that company founders attend and scientists attend. And this is just creating a bit of an ecosystem. Now, as you know, with Brexit and everything else that's happening around Europe politics, Europe is not exactly a unified market, and that is a challenge. But it's interesting to see that despite the governments not exactly playing ball, founders and investors are starting to realize that we need to think of Europe as united if we want to grow the ecosystem overall, and in particular facilitate hubs that are just across countries and not just within a specific area within a specific country. And this is starting to happen despite politics, which is interesting. And of course, in Europe, we can also see where we're particularly strong in terms of tech development. And we can see that we are doing fairly well in tech and biotech. Novel computing, energy and climate, and quantum actually, increasingly well as a share of the science innovation around the world, which is interesting because, again, if you're going to invest in companies in Europe today, why would you pick anything else than deep tech? That's the question we ask ourselves when we have so many underlying factors that make Europe the best place to actually succeed at deep tech. And if you follow us in saying that deep tech is the new tech, then this leads to consequences as to how this is a global opportunity for anybody from around the world to come here and exploit from an investment perspective. And of course, from a founder's perspective, the best place to potentially start a company. I will add a caveat though. And the caveat is that even though this innovation is growing and the research community is growing, and the EMA's share of global VC is growing, the reality is that there's still a huge gap. If you look at this number, you can look at it from the optimistic perspective and say, hey, we didn't exist on the map, now we do. And you can look at it from the pessimistic perspective and say, well, it's still a tiny fraction. And the interesting thing is that on the other side, China subsidizes with government money a lot, so it's a little bit different to place it in a VC investment market. But the US doesn't, and the US still is the giant in the industry. And therefore, I would argue that even though it's great to be optimistic and great to be thinking about Europe as a great place to start companies, and we also need to think about how to make Europe the best place to grow, or at least a great place to grow a company. If you are a deep tech company and the deep tech companies we're looking to back need to reckon with the US as early as possible. I would say as early as you've raised your very first tiny rounds, even the angel round. You need to think about the US in terms of getting funding from there for the future, and you need to think about the US as a way to create commercial partnerships, even if maybe not customers immediately. But again, the positive story continues that the growth is something that's happening, and therefore with that we can take the optimistic view and say, well, the growth is happening, and yes, we're still a fraction, but it's growing and it's been growing. And through this growth, we are seeing that whereas before the US was a monopoly, now Europe, Middle East, and Asia are producing just as many companies, and in particular within Europe, Middle East, and Asia, actually Europe is starting to have its own fully fledged ecosystem with unicorns, with venture funds, even large venture funds, and with an entire ecosystems that supports this. And within this, the shift in tech is happening across the board. Therefore, the entire ecosystem here is now ready and needs to shift if it is to capture the wave that is across tech and is across politics and is across the world. And that's what we're going to get into in just a second. If you want to know more about this particular data, you can dig out most of it from the Lakestar sponsor report on Deal Room, which they announced at Slash after our event. So even though this was exclusively released from our event, if you want to know more, you can get that free report